wonderful good day to you. This is Owen McCafferty speaking through the kindness of Professional Fusion, continuing our very short narratives on things to consider and do, focused in the veterinary, dental, and dermatology-based human medical professions. What I would like to at least address right now is the time of year. I know we have elections coming in, we have considerations for weather, especially down here in Florida, where we watch like a hawk the projections of where hurricanes and typhoons and tropical storms and depressions may be. But September and October are the 2 months when you really ought to look at the total documents that you have in your practice. And when I say documents, let's go through a couple of them just to consistently assess where you're going. First of all, buy-sell agreements. If you're in a situation where you have either a partner that would be buying out your equity interest, a shareholder, or possibly you have an arrangement with another individual who is not a formal partner or shareholder, but rather a person who has agreed that in the event of a difficulty under a doctrine of mutual self-help, they would buy your practice at a specified formula. So every sort of buy-sell arrangement should be reviewed annually to make sure that that which was is still the intent. And when you look at your buy-sell agreement this year, make sure you understand the basis upon which that you will be signing it. So for example, if you are making reference to a formula for valuation, you better specify in that formula for valuation, is it based upon intrinsic worth, investment value, or strategic value? That one little complexity, which heretofore was never really a factor, is especially important in the dental and veterinary professions, but is becoming more of an issue in the dental professions. And in fact, my dermatologist has recently had her practice sold to an aggregating group. So we're seeing in a lot of the professions there is focus towards investment value or strategic value, whereas intrinsic worth is usually what you find when you've got a partner who wants to buy out an equity interest of another partner. So be careful. If you don't specify, you're going to have problems down the road. This is a good time to just look at those documents. And when you do, have your accountant of record or a consultant with a competency, and you know I am definitely prejudiced towards CPAs, go through a calculation, either a market study of what your practice might be worth or a calculated value report, but I don't think you need to go through the expense of a full valuation, at least to get an idea about where you sit so there's no surprises. All right, the second form of documents, employment agreements. Reread again the employment agreements for everybody, both associates and equity owners, just to make sure that that which you agree to is that which you're being paid. And while you're at it, look at your W-2s and make sure that you have adequate withholdings on your W-2s to meet in the tax liability by the end of the year through the W-2 withholdings. And the reason why that as a document is important on the withholdings is that the payments made through withholdings are deemed to be paid ratably throughout the entire year. So when you look at the employment agreement, pull out your own W-2, project by year end where it sits, and then look at your liabilities both for federal, state, and even local if you live in a community that has a local tax, either as workplace or residence or both. Then, of course, I request this all the time from my clients. They rarely seem to be able to do it, but write corporate minutes. Or if you're not incorporated, if you're functioning as a partnership, make sure you have some sort of memorandum of partnership minutes, because this becomes the basis and the logic and the thought and the authority to do what you've done in the past. Even if you're a sole proprietor and you're not incorporated and you really have no obligation, it still is very important to have that document reviewed. And while you're at it, from a personal standpoint, you may want to look at your own personal documents, specifically a will if you have one, or maybe documents like a living power of attorney with durable features so it survives the incapacity of disability. And you may want to look at other related personal documents, such as a Dearest Mary letter or a Dearest John letter, where you let people know what your intentions are in the event of a premature departure from this earth, and the will can't be located in time for the burial. So these types of documents are important. Also, look at any promises that you made, both in an oral format as well as a written format. This is the best time to do that. An example of an oral promise would be the promise to staff of a bonus if things are attained, because you have to make sure that you'll have the cash to honor those obligations. Now is a good time to sit down with your accountant and talk about any documents that you have in your possession that wouldn't be a bad idea that you freshen them up. Talk to your accountant about doing some sort of valuation, market study, calculated value report, just to get an idea where you sit. We recommend that at least once every 3 years, you consider some sort of calculated value report or market study. Surprises are a horrible thing, and you just don't want to have them. So I'd strongly recommend, if you can, consider that. It will pay you dividends down the road in a lack of heartache. Just a thought for September, October, just in line with hurricane season. It's a great sport down here in Florida. But wherever you might be, including the remnants of those hurricanes that flow up, it looks like through Atlanta, possibly St. Louis, going up to Chicago, just be aware that now is the time to think about documentation. So, Owen McCafferty here. I sure want to say thank you for listening in, and talk to you in a bit.